So we're still looking at this question on Nsimbi Pamasando. Okay, we have done with the trial balance. Now we have to make the trading account. Purpose of the trading account is to get the gross profit. Okay, the gross profit is just basically the profit after you deduct the cost of the goods that have been sold. All right, that's the gross profit. So here we must be careful. There's some additional information which will affect the trading account. Okay, certain expenses are going to be charged to the cost of sales. Okay, energy expenses and wages and salaries 50% and 40%. This distribution and admin expenses, these are operational expenses and they'll be in the statement of profit or loss. Okay, yes. Then what's energy expenses? All right, so what is the first item that is going to go to our trading account, colleagues? Let me bring my trading account here. Sales revenue. Sales revenue will be the first item in our trading account, right? So we're going to say sales revenue. Remember, you can make 3 columns like this. So sales revenue. This is the money we've made from selling our goods and services. Right. Then the next item that comes in is return inwards. As we said, colleagues, return inwards, this is the goods returned to you by your customers. When they return, you have to give them their money back. Okay, so you have to deduct return inwards. So let's get our calculators to make sure all these figures here are accurate. Okay, so 1510 minus 48, I will get 1462. Are we all getting 1462?
Yes, sir.
Okay. After that, or any questions before we go to the next section where we have to now get our cost of goods sold? Or you want to know what we call this 1462? You call it net sales. Okay, net sales. Okay, you don't have to put it, it's not mandatory that you put net sales, but just for your own information. Okay, after you've got your net sales,
You only subtract the return inwards.
yes, only that, nothing else. After you get your net sales, the next thing you need to tabulate now is your cost of goods sold. Because remember, the main formula for the trading account is gross profit equals sales minus cost of goods sold. Okay, so we've already got this value. Next we need to tabulate our cost of goods sold. Right. So the cost of goods sold, if we break this formula down, is the total cost of goods available for sale minus the closing inventory. Okay, that's how you get your cost of goods sold. Okay, total cost of goods available for sale minus closing inventory. Right? So first thing first, we need to get this total cost of goods available for sale. Right? So you start with your opening inventory. Okay, opening inventory, this is the goods that you began with at the beginning of the year. These are the goods you start with. After your opening inventory, you're now going to add in your purchases, the goods that you brought in that year. Okay, so with purchases, there are usually some adjustments, just that in this question there's no carriage inwards and return outwards. Okay, and also you can also subtract discount received from purchases, but in this question they told us discount received is an admin expense. Surprising. Okay, so colleagues, do you remember what carriage inwards is and what return outwards is, so that should you encounter them, you know what to do with purchases? What is carriage inwards, what is return outwards, and how do we adjust purchases with them?
Return inwards, these are goods that are returned by customers.
Outwards, return outwards, sir. Return outwards.
Return outwards?
Yes, yes, yes.
Yeah, so these are goods that are returned to suppliers.
Yes. So do we subtract it from purchases or do we add it?
I think that has to be added.
Think about it like this. Okay, you buy 100 bags of cement at 1,000 kwacha from your supplier. Then you return 50 bags of cement with 10 kwacha each to your supplier. So what happens to that 1,000 which you paid initially? Does it reduce or it increases?
It reduces, so we have to subtract.
Yes, you subtract. Encourage inwards.
Carriage inwards must be added, I think.
Yes. When you got those 100 bags of cement, if your supplier said we're going to deliver them to you at a fee, say maybe that fee is maybe 100 kwacha. So that 100 kwacha delivery fee, okay. Just think of Yango when you hear carriage inwards and carriage outwards, okay. Just think of Yango. Okay, no, delivery expense, not Yango, delivery expenses. So carriage inwards you add, okay. Then, okay, if you want, you can also deduct discount received, because discount received also lowers your purchases price. You can also subtract discount received from the purchases. If you don't do that, then you can add your discount received to your gross profit at the end. Okay. Yes. Now in this question here, as I said, discount received will be treated as an admin expense. Okay. If you don't believe me here, discount received 100% admin expense. Okay. So first things first, we need to get our cost of sales. Then we're going to do these apportionments. 50% of the energy expenses cost will be added to the cost of sales. 40% of the wages and salaries are going to be added to cost of sales. Okay. Yes. So let's first find our cost of sales. Okay. So after you add your opening inventory with purchases, this is your total cost of goods available for sale. Okay. Now, colleagues, you want the cost of the goods that were sold. So the way you get the cost of the goods that were sold, all right? First, you get the total cost of the goods available for sale, the value of all the goods that you had throughout the year. Then you subtract the closing inventory, the goods that you remain with at the end of the year. Okay? So that you get.
Sorry, I'm not able to see the picture. I don't know.
No, it's I've removed it. I'll go back to it. I'll go back to it. Yeah. So, what was I saying now? Mr. Ronald, you have now confused me. What was I saying, sir?
You are explaining on the total goods for sale, available for sale.
Okay, yes. Yeah, I was saying that to get the cost of the goods sold, okay, or cost of sales, you get the total cost of the goods available for sale, all the goods that you had from the beginning of the year to the end of the year, minus the goods that you remain with at the end of the year, your closing inventory. Okay? So we're going to say total cost of goods available for sale minus closing inventory. This figure was given to us in additional information here. Okay, closing inventory has been valued at 60,000. All right, so we subtract 1012 minus 60, we get 952. Okay, this is the cost of the goods that were sold. Okay, we don't want the cost of the goods that haven't been sold. You cannot make a profit on goods that you haven't sold. Okay, that's why we want only the cost of the goods that have been sold, not those that have not been sold. Any questions? Okay, now we've got some adjustments to do. Okay, let's read the adjustments here. If you can see here, energy expenses has to be added to the cost of sales. Okay, now on this additional information, we've got energy expenses of 12,000 for May 2024 that have not been invoiced or recorded. So we need to record these. Okay, we need to record it. So we assume it's been recorded, done the double entry, debit energy expenses 12,000. So it means this 12,000 here, we're going to add it to, where's the other energy expenses, this 70,000 here. Okay, this 70,000 from our trial balance, we'll add it to this 12,000. Okay, So our energy expenses 70,000 plus 12,000, you get 82,000. Okay, because before you apportion that energy expense, okay, do not forget to include this one here. Okay, so they said 50% of this 82,000 will be taken to cost of sales. Okay, so you can see here 50% of this 82,000 is going to be added to cost of sales here. Okay, any questions before we look at the next adjustment? Okay, wages and salaries. Let's see on additional information. It was anything about wages and salaries. That was
That's you said the 50% of the 82,000 will be added to the cost of sales. The
Yes.
cost of sales figure is it 952? So you mean the percentage that we get off the cost of sales? Sorry, the
energy
versus
expenses.
the energy expenses will be added to that figure.
Yes, these ones here.
Oh,
Yeah, all of these here are the ones we're dealing with now.
okay.
They'll all be added to this 952. Wages and salaries. Let's see. I don't think there was any adjustment for it. This 144,000. They told us 40% of it will be taken to cost of sales. Okay, so 40% of this 144,000, which is 57.6, should be added to cost of sales. Then the depreciations. Okay, we start with plant depreciation. Plant is depreciated at 25% per annum using the reducing balance method. The entire charge is to be allocated to cost of sales. Okay, so colleagues, depreciation, this is the loss in value of tangible assets. Okay, non-cash expense. Okay, that's why we're adding it back in the cash flow statement, because we're going to deduct this depreciation. We're adding it to our cost, meaning it's going to lower our profit. But no money has been paid. That's why it was added back. It's added back in the cash flow statement. So the reducing balance method, there are two main ways you get depreciation. Reducing balance method and what's it? What in the other one's name? I'll see its name. Okay. So this is the formula for the reducing balance method. Cost minus accumulated depreciation, which is basically the net book value of that asset. Okay, cost minus accumulated depreciation times the rate. This is the reducing balance method. Okay, so plant, its cost is 176. Accumulated depreciation 88. So 170 and the rate 25%. 176 minus 88, you get 88. 25% of 88 is 22. Okay, 22,000. So this 22,000 would be added to cost of sales. Any questions? Okay.
So, sir, are we expected to remember the formula?
Yes. They won't give you the formula for it. It's like reducing balance method. They will just tell you reducing balance method. So just remember, cost minus accumulated depreciation, which gives you the net book value of the asset, times the rate. Okay? With the reducing balance method, as the years go on, the depreciation expense is reducing. Okay. Then, I don't know how I've forgotten the other name for the other depreciation method, but that one, the depreciation expense is just the same every year. Okay. Yes, a straight line method. Yes, straight line method. That's the other way of calculating depreciation. With the straight line method, the depreciation expense is the same every year. So buildings are depreciated at 5% per annum on their original cost. Allocated 50% to cost of sales, 30% to distribution costs, and 20% to admin expenses. So 50% of our depreciation expense for buildings is going to cost of sales. So we need to calculate depreciation for the buildings. Okay. So the straight line method is just the rate times the original cost. Okay. Very easy straight line method. Just the rate times the original cost. Okay. So for buildings, the rate times the original cost. Cost of buildings 592. The rate 5%. 5% of 592, 29.6. So 50% of this 29.6. Okay, 50% of the 29.6 is going to go to cost of sales. Okay. So once we've done our apportionments or our allocations, we now add these to the cost of sales. So 952 plus 22 plus 14.8 plus 41 plus 57.6. Colleagues, confirm with our calculators. Do we get 1087.4?
Yes.
All right. So we now tabulate our gross profit. Sales minus cost of sales. So 1462 minus 1087.4. 1087.4. We get 374.6. Any questions?